Hello, trading is closed on July 29, 2020. We'll go over our call. We look for the pattern with the early low. This is it. Tomorrow here's the early high. Market was dropping like this. We said it was likely to gap up, and that it did. We said if the gap up was over this high, the rally could continue. If not, we expected a pullback. Well, I have to call that one a miss. Now, a number of times in the past, I've said if we gap up and promptly, meaning without pulling back significantly, take out the high, that's just as good as gapping up. But I did not say it yesterday, and because I didn't say it yesterday, I have to count that one as a miss. So here's what I said, likely to gap up. Let's look at what happened today. MEJT gave a buy signal here, said this pullback wasn't the real thing, it was false, and that's already paid off. Here's the longer term pattern. From this perspective, this rally hasn't accomplished much yet, and it might not pull back, but once it breaks this line, I think we're in trouble. That has not happened yet. So far, all we have is a Fibonacci retracement of the decline and the retest of the lows of the prior consolidation. This is the count we're using, and it still is a valid count, but if the rally continues past these highs, then the idea fails. That hasn't happened yet either. If we stop here, here's how we'll count it, but it's not the only way to count it. One thing we'll call your attention to is we have this wall and a hole in the wall gap. These are not sustainable moves. They tend to fill at some time. Usually, but not always, they fill pretty quickly. And by pretty quickly, I mean by tomorrow and occasionally Friday's open. The typical thing is to move, undercut this low, and find support there. And if that's what happens, if we get a strong move down, that would validate this count, would increase its plausibility, although you'd still have to undercut some prior lows to be totally convinced. Usually that's what happens, but if it doesn't happen in that time frame, it should happen at some point soon. It should happen at some point, but it need not be any point soon. I've seen sometimes these things fill after weeks to months. So if you're a bear, what you really want to do is to undercut this low promptly, ideally tomorrow, and no later than Friday's open. And if that happens, everything is going according to plan. But if we keep going up, overtake this high, then this candidate for high fails. Thursday's pattern has the early high. Typically, it's a rally day with a final hour high. Failure is a straight line drop. Remember, usually the day's a rally day. If it drops in grand style. Today's hole in the wall gap usually fills pretty quickly by tomorrow or Friday's open, but if it doesn't fill then, it doesn't have to fill anytime soon, even though it should fill at some point. We have a day-long rally. We tested the lows of the consolidation at last week's high, couldn't close over the midday high, which questions how much the rally's accomplished. However, first move after the FOMC announcement was up, and usually, again, not always, usually it indicates the direction of the next significant move. So the response to FOMC usually means we're going higher. So far, this has been just a retracement of last week's impulsive drop. Burden of proof now is on the bears. They need to retrace today's rally to confirm the suspicion that last week's high holds. If tomorrow sees a strong decline, and that suspicion most likely is right, Bulls need to rally past the high. I still think it's a time for caution, and if we do take out the recent high, I do have targets not all that much higher, but they're not just a point or two higher, and they're probably worth playing. So this is a good chance for the bears if they can move down strongly and undercut this low. But if they don't, they're going to drop the soap once again. I suspect before tomorrow's over, we're going to know who wins. And that's today's call.